Welcome to the Skilled MBA Finance Case Study Series, where we explore real-world ventures that embody financial innovation, strategic thinking, and long-term value creation. Buying a home is often considered a milestone, but financially, it's not always straightforward. The House on Ramsey Street case study explores a classic dilemma: buy or rent. Set in the competitive 2022 real estate market, the case follows a young couple weighing the financial and emotional implications of homeownership. Their decision involves more than just monthly payments. It's a complex analysis of upfront costs, mortgage terms, market appreciation, rental inflation, opportunity cost, and tax benefits. By applying tools such as net present value, break-even horizon, and tax-adjusted returns, the couple gains clarity on the long-term consequences of each option. This case underscores how personal finance decisions, especially those involving real estate, require the same rigor as corporate financial analysis. It reminds us that informed financial decisions aren't about following trends. They're about understanding trade-offs, forecasting risk, and using professional tools to align personal goals with financial outcomes. The House on Ramsey Street case study examines a young couple's decision-making process in Washington, District of Columbia's competitive 2022 real estate market. It highlights the application of financial principles to personal decisions, showcasing how professional tools guide choices between buying a friend's house or continuing to rent. Equity residual cash flow valuation involves using discounted cash flow analysis to assess residential property investments by calculating future equity residuals' present value. Mortgage amortization highlights how financing creates leverage, affecting risk and returns. Risk-adjusted discount rates account for increased risk in leveraged real estate. These tools aid in making informed personal housing and investment decisions. In mid-2022, Washington District of Columbia's housing market saw rapid property value appreciation, offering both opportunities and risks. Rising rental prices pressured tenants, while historically low yet increasing interest rates added complexity. Limited housing inventory fostered a seller's market, heightening urgency for buyers and elevating the financial stakes of home ownership decisions. Renting offers lower initial costs, flexibility, and no maintenance with predictable expenses. Buying builds equity, offers tax benefits, and protects against rent hikes, fostering long-term wealth. Weigh these factors carefully to decide the best path for your financial and lifestyle goals. Discounted cash flow analysis involves projecting future cash inflows and outflows, including mortgage payments, maintenance, taxes, and appreciation. Selecting an appropriate discount rate is crucial, reflecting investment risk and opportunity cost. Calculating the net present value of these cash flows helps determine if buying a home creates or destroys value compared to renting. Leverage in home buying, achieved through mortgage financing, magnifies both returns and risks. A 20% down payment results in 5 times leverage, allowing control of a 1 crore rupee property with 20 lakh rupees. A 10% appreciation yields a 50% return on equity, while a 10% decline results in a 50% equity loss. This leverage effect is crucial in buy versus rent analysis. Home ownership involves initial investments like a 10 to 20% down payment, 2 to 5% closing costs, and initial repairs. Recurring expenses include mortgage payments, property taxes, insurance, maintenance, and homeowners association fees. Terminal value considerations include the projected sale price, selling costs, remaining mortgage balance, and potential capital gains tax. Market risks include property value volatility, interest rate fluctuations, and neighborhood changes. Personal risks involve income stability, future mobility needs, family size changes, and unexpected maintenance costs. These factors can significantly impact the financial viability of home ownership, requiring careful consideration beyond mere numerical analysis. Time horizon is crucial in real estate decisions. Short-term ownership often incurs high transaction costs, making renting preferable. In the medium term, buying becomes viable if property appreciation surpasses 2 to 3% annually. Long-term ownership generally offers better financial returns through equity buildup, appreciation, and inflation protection. Consider the opportunity cost of a home down payment. Funds could yield 7 to 10% annually in the stock market versus 3 to 5% in real estate. Evaluate tax implications, the forced savings of mortgage payments, and liquidity differences. These factors influence whether investing in property or stocks aligns better with your financial goals. Intangible factors play a crucial role in home ownership decisions. Emotional benefits include pride of ownership and community belonging, while lifestyle flexibility allows for relocation and adaptation to family needs. Maintenance control offers freedom to renovate or avoid responsibilities. Security perception balances the psychological security of ownership against the flexibility of renting during economic uncertainty. Case teaching applications integrate corporate finance through personal net present value and internal rate of return applications, financial planning with practical wealth building strategies, and real estate finance via entry-level property analysis. Teaching methods include Excel-based cash flow modeling, sensitivity analysis, scenario planning, and debates on buying versus renting strategies. Financial decisions are deeply personal, requiring rigorous analysis for improved outcomes. The time horizon is crucial in determining the optimal strategy. Both quantitative and qualitative factors must be considered. Professional financial tools are applicable to everyday life decisions, illustrating that finance is not just for chief financial officers, but for everyone making significant life choices. Thank you for exploring this finance-driven case with Skilled MBA. For further insights into the house on Ramsey Street and other case studies, reach out to Skilled MBA. Contact us via mobile at +91 87553 00795, email at support@skilledumber.com, or visit our website at https://skilledumber.com. Our resources are designed to enhance your understanding of financial decision-making.